Good evening, David DT, Trading-to-Win.com. This is the second video tonight. First I discussed weekly charts of S&P 500, and right now you're looking at daily chart. As you can see, 584 is the target, ultimate bottom target, calculated based on weekly DeMark D wave. But here, as you can see, there is another possible outcome. Bottom somewhere in the area of 772, 74, and I think this is what a lot of people would love to see, because it would form kind of malformed inverse head and shoulder, and that's pretty much the same level as in November 2008, and that provide some kind of trampoline jump start area. Not to overlook that there is a TD level of TD sequential right here. TD sequential come down, that might provide another support. As you can see on 826 31, actually there is a Fibonacci time series of the top of June 11 that would provide additional possibility to move up. I will zoom this chart a little bit. This level is not important for this discussion, I guess. Alright, so what we see here? We see here that 912 TDST resistance, we're under it. We're under yet another TDST resistance right now. We pretty much in buy setup, going to end Tuesday, Wednesday, and we're probably going to undergo small run up to 895, after which we're going to go down in that zigzag manner. The question, the really big question, is whether we're going to stop at 772 area, which is, by the way, 61% Fibonacci March bottom to June top. Let's go to the next chart. Should I make my trading decision based on a daily chart? Looking at the wave count, we are in WB, confirmed WB, but it's not ended, it's still in progress. I would be hard pressed to go short here. Looking at RSI, it's pretty much about 60 line, so I would say that it is possible that we are in wave up structure, and then we would have that target I had 1115 for W3 up. The problem is W1 and W2, even though they are defined as of right now, is still only two waves, and if market will go below March lows, that wave up, green one, is just going to be cancelled like it's never been here. So I would prefer to say that we are in WB in corrective, and it can go on for a while, and there is no set target for that, and there is no limitation that it cannot go below that low of W5, but we cannot make omelet of it. Let's go to the hourly chart. Alright, we're looking at an hourly chart of S&P 500, and as you can see here, as I mentioned in my prior video today, we have what is called deep retracement on W2 wave. So it's reasonable to expect that W4 wave, which has not yet been defined and so on, but it looks like it is in progress. Looking at RSI, we are in down wave, so the green scenario, first of all, is just ended, and second of all, if it wouldn't end, we could just discount it. So we are in wave down. We're most likely forming W4 up, and W4 up after deep retracement on W2 would go to 38%, which puts us in somewhere 894.95 area. Right now you're looking at 4 hours chart, my second favorite after weekly chart, and as you can see, buy setup has completed, and there is a possibility that it might attempt to go to as high as 930, which I don't think gonna happen. It's probably going to go to somewhere this area, which puts us in pretty much the same area as our D wave, so slightly below 900. That's most likely scenario. Now we're looking at /TX, dollar index futures. Everybody is keep talking about bear flag. Bear flag is malformed. It would be bear flag if it would stay in this channel. Right now this is just consolidation. And to add to that, we have TD sequential buy countdown completed here. And let's see if 8, well, it's not perfect one because 8 is below 13, and 5, well, at least 5 is kind of above. So there is a chance that maybe another few days it might complete buy setup by the end of next week. So dollar will be going up. That will add to market descent, and commodities will go down as well. As of right now, probably dollar is going to retreat a little bit next week, and commodities will have its last run up. I'm long potash, and I think something else, but I would expect dollar to go somewhere to 82, 83 area maybe. I even set up alert for 82.24. Alright, quick look at USO daily chart. As you can see, on June 11th, it's completed TD sequential sell countdown. I went short, and I covered my shorts last Friday because it's basically almost completing buy setup. That will play well with fallen dollar, well, retreating dollar next week, as I expect. It's probably going to go a few bucks up. I don't know what's going to go after that. This is USO weekly chart, and it's probably going to struggle with that Fibonacci fan for a while, but then it's definitely going to go up because dollar really have to collapse at one point, not just yet. Alright, and finally you're looking at UAP, US dollar ETF. As you can see, we don't really even have to choose between alternate wave scenarios at the current moment. Indeed, it is red, and more downside will follow, but it has completed wave 3 and it's most likely starting corrective wave up W4, even if it would be in uptrend wave. It has completed wave 4. It has not confirmed that it has completed it. It still can change, but most likely it is in wave up right now. But then again, we're talking about rest scenarios. Some move up and then obviously at some point collapse. But this is a long-term view, and I don't really like to trade anything longer than 3 days, few weeks, except for the moment when bubble is about to burst, and I prepare myself to stay in a trade for a few months, like it was in with the oil back in, what is it, 2008, 2007. I have bad memory. Good night now. Trade well. David E.T. Trading-to-Win.com.